Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, September 18th, 2024. So, hopefully, you guys had fun today. It was a crazy, crazy day. Fed days always are, but, we have Powell that came out and did a 50 basis point rate cut. And I'm not really too sure what, I said that it could go two different ways on this. I said one is if they do a 50 basis point rate cut, everybody's going to think that the economy is a lot worse off than it is. And that's, we got the initial spike that, thank you, Powell for cutting 50 basis points, and then from there reality set in and we moved down. But these moves are head fakes, so I'm not saying that the top is in just yet. We have to wait for some support levels to break, and until then, you just keep seeing what's going on. And right now, this, the 59, the 59, the 5600 or 5596. This is important because if the bears can push through it, then we're going to be coming down to this 5540 level, and there's a chance of us coming all the way down to the 5483. Those are our pivots on the downside. If we head higher, the only thing is that we can get some targets in place, meaning that now we have that top here. So what we can do if we pull back, we could just use this trend line as possible areas of resistance. Wave structure, it's complete. Like I said, if this market could turn at any time, and it would make perfect sense from a technical aspect of the market, just because we have the sell signals, we have 5 waves up. And the thing is, I'm not a big, let's say, Elliott wave with the squiggles and stuff. So if these aren't right, this may have been an A, B, C, a 1, 2, 3, 4, 5 of an A, and now we made a wave B here, and now we're making 5 waves, wave C. And from there, though, like I said, the bigger point move is going to be to the downside, because once we do make this top, the odds of us coming somewhere down into the 5250 level are pretty high. And right now, the way that this market's been going, the bull markets are, they last until they don't, and usually when they don't, people get trapped and they buy the whole way down. So I've been doing the calendar spreads, and I bought the 565 September 24 call, and I've been selling the the 0 days to expiration. I've been selling the 565 line, and the reason why is if the options that I sell, let's say the market screams higher, it's going to be a break-even trade, because my actual options that I own have a longer duration. So if it goes up, it's not bad, but when it goes down, since there's 0 days to expiration that you're selling, and when it goes 2 or 3 points below the strike price on the SPY, those options are getting absolutely slaughtered. So I was able to actually sell and then buy back 3 times today. And I've done it. This is, I believe, my 6th trade on it, because when you're able to trade these, meaning that when you see a couple $1,000 profit, you just simply turn around, you close it, and then wait for a bounce and then rewrite it again, and you just keep doing this process. So right now we're up to close to, I'm going to say 15,000 that we've sold in the contracts, or the spiders calls that we've been selling. And we bought the September 24th, and these are 50 contracts, so don't take these numbers crazy, but we paid 24,000 for that. So right now our cost average in our 565 calls are about $9,000, and I can actually sell those for 14. So right now we started this last Friday. We can lock in $5,000 right now and do it, and it was really not a whole lot of stress at all, because all you had to do is just keep selling off of the call that you have. So that's been working out pretty good. I may be doing some kind of training on it, but in any case. So for right now, this has 5 waves. Maybe this is just a head fake after the Fed meeting, and we head back up. There's reasons to believe that it's not going to happen, just because we have these bearish divergences. And another thing to keep an eye on is we've been on this buy signal. You can see that with the aqua line right here. So we had this head fake down, and then we came back up again. And we've been on this on a buy signal since 9/11, and we've had pretty much a straight move up. Now this one, we had the buy signal going from 8.8 up until 8.22. So about 2 weeks. The same. It was about 2 weeks before we saw this start to break down, and then we saw the move down, and you can see the sell signal. So what we're seeing right now is we're testing this right now. So if we open up down tomorrow, and if the bears can get through this 55.96, we are going to see it's then going to be this pink one, and it's going to be trending lower, and we haven't had that in a while. And you can see sometimes you get some whipsaws up here. This is always a topping process up here. But once it starts doing that, typically what will happen is we're going to see a move that breaks support, and then from there we get a bigger move down. And you can see it's been working out pretty good. These were consolidations, so just whipsaw, and then we head up, and then from there, this is where we had it. So the bears need to get it through this 55.96 level. The bulls are going to have to get priced back above the 56.72 to sit there and test these highs or break them. And if they break them, then we'll probably, we'll see maybe a run up to the 50. The 57.50 in that range, since we pretty much came pretty close to the 5700 here, 56.90. So that would be really where I'd be looking if we do head higher. And like I said, after Fed days, things are kind of crazy. I've seen days where we've had the market rally after a Fed meeting, 100 points on the S&P, and then give back 100 points. So I'm not going to predict what's going to play out tomorrow, because it's kind of hard. But as I said, from a technical view, it should be heading lower, but we just have to wait for support to break. We have to just really wait, and this is really what I'm saying, where the fifth right around this 55.96, if we get below it and then it's used as resistance, because typically what we have to be aware of is if they break this support and then come right back up again so it's a failed breakdown, and then it traps a lot of shorts here. But if we come down and then it's used as resistance, then that's when we start looking for that 200-300 point move to the downside. And like I said, it could be more than that. The bulls have been very spoiled with just going with the Fed rate cuts and stuff like this. They were factoring in 6 this year. So things are going to start. The reality is going to start setting in, and with the valuations where they are, I'm not really a big valuation trader. But the thing is, with where we are right now, and if the economy is starting to roll over, and that's why the Fed did the 50 basis points, then stocks are going to have to play catch up, and they're going to and go down with their PEs, because most of them are through the roof right now. So you can see here again, this is until the bears can take this level out and then use it as resistance. You just got to look both ways. But these levels have been tested a lot. hot, so they're starting to wear down a little bit. And as I said, it's one of those things that we have to just wait and see what plays out tomorrow, how we open, and if we could take out support, then we look for a bigger move to the downside. So with that, have a great night, and I'll talk to you guys in the morning.